So welcome everyone to Master Your Money Masterclass. My name is Keisha Bailey. I'll be your host. I do these masterclass every month to just kind of spread the word, spread as much information and education as I can, because my goal and my passion is to teach people how to invest in the stock market so they can be set for life. My company is Profit Jumpstarter. I'm the CEO and lead investment educator on that. I think a couple of my clients are here. You guys know yourselves. They can attest to what we do in terms of the education they get, the knowledge they get, the advice they get, and so the advice on how to approach the knowledge base around investing, and they're learning, they're implementing, and they're doing very well with it. So today, what I'm going to be covering is how you guys can get started investing for persons who are here today and say, you know what, I want to start investing 2021, not going to catch me the same way that it saw me. So I'm leaving the year much better than I started. This is the right place to be because you're going to learn a whole lot today that you can use and get started. So my objective here today is to show you how to get started with investing so you can make more money and be set for life. I absolutely believe wealth is not a luxury, that it is a must. If you guys feel like, yes, wealth is for everybody, I want to be rich and I know I can be rich, give me a wealth in the chat saying, yes, wealth is mine, wealth, wealth, wealth. So I know everyone here is looking to achieve wealth. If you're not looking to achieve wealth, you're not in the right place. Wealth is mine. Yes. 100%. Yes. Are you guys not hearing me well? Generational wealth is mine. Wealth straight. Wealth is mine. Wealth is mine. Okay, perfect. That's my aim, to teach you how to invest so you will be wealthy. That's what we're going to do. So you're in the right place. If you're thinking, you know what, I don't have any clue with investing and I want to get started. No idea what this investing thing is, but I know I want to get started with doing it. Or you have some money in your savings account and you're not sure what to do with that money. Or you want to just learn how to make your money work for you. You hear everyone saying, yeah, I want to make my money work for me. I want to make my money work for me. You want to do that. You're in the right place, because I'm going to show you exactly how to do that, how to earn passive income, how exactly you set up that for yourself. So what we're going to go through today first is the importance of having a winning money mindset, making sure that you think a certain way when it comes to your money. You're not thinking negative thoughts, you're thinking only positive thoughts and abundant thoughts with your money. And then we're going to look at some strategies that you can use to get started with investing. And then how exactly do you invest like a boss for the long term? Does that sound good for you guys? Give me a yes. You're saying, yes, I am ready. Okay, yes, yes, nice, nice, perfect. So, and also if you're ready to make big moves, if you are an action taker and you say, you know what, now is the time for me. I love what Keisha said. I'm going to show you a way that we can work together at the end. So just stick around to the end. If you're all about action and you say, yes, I am ready to go, then you're in the right place. Absolutely in the right place. I will show you what you need to do. So let me start by giving you a bit of my background so you guys know who I am. You know who is talking to you today. And okay, how is she qualified to even tell you anything? So I'm Keisha Bailey, CEO of Profit Jumpstarter, born and raised Jamaican, born in Augustown, from humble beginnings, and through investing, I've been able to achieve a fair amount of success in life. I also am a university lecturer, so I teach with the Mona School of Business right now. I teach their advanced finance courses, so very knowledgeable about finance. I've done a lot of studying in finance. I have my MBA. I'm a CFA charter holder. That's a very hard designation to come by. And I'm also an FRM charter holder. My MBA is in Canada, graduated with honors in finance at the Ivy School of Business in Canada. I've been in finance for 17 years. I am a mom, wife, sister, and friend. That's on the social side, but on the investing side, very knowledgeable. I've been in the market, the stock market, for a very, very long time. I've seen the ups, the downs, the sideways, and I know how to make money in every single way. And that's what I'm going to start teaching you guys. How exactly do you do that? How do you make money with investing? But these days, investing has allowed me to live a certain type of lifestyle. The financial freedom is what I'm all about, financially free. The peace of mind when I know that I don't have to worry about money because my money is working for me. How many of you guys, drop in the chat, want to be financially free? Is that a goal for anybody here? Give me a free in the chat if that's you. Say, yeah, free. That's what I'm looking for. Nice. Nice. Okay. So financial freedom is the goal. I have worked towards it for a very long time. I'm there. And right now I'm designing that work from anywhere lifestyle. So I'm between Jamaica and Canada. My business is 100% virtual. So I can work from the beach. I can work in the mountains. I can work anywhere at all because the investments I've done afford me that lifestyle. I don't have to worry about what's going to happen with money because my investments are there and they're always working for me. And my passion is to show you guys how to do the same thing. How do you put your money to work for you so you don't have to worry about money? You feel free, you stop worrying about money. That's what I'm here to show you guys how to do. So I want to know from you guys, why are you here? Why do you want to learn to invest? Why is it important for you? Drop it in the chat if it's any of these reasons or your own personal reason. Why do you want to invest? Is it you want to quit the 9 to 5? You want to make more money? You want to be able to take care of your family? You want to buy a dream house? You want to retire? Why exactly are you looking to start investing? Create wealth. Wealth creation. Okay. Still generational wealth. All of the above. Family legacy. Make more money, create wealth. All right, so I've seen the create wealth a lot. Definitely. Yes, yes. That is what comes from investing. Living well, for sure, also very, very possible. All right, generational wealth, I see that. So I know when it comes to investing, a lot of people will say, do I have enough money to get started? Do I even have the time? Because I see people trading Forex. I see that them have to be glued to a screen. Do I have time to do that when I have a busy 9 to 5 job or running a business? How exactly can I do this? Do I need to block out time every day to do this? How much money do I need to have to get started? How do I get started? How exactly? People say go and open an account, but how exactly do I open that account? I don't know what to do. How long before I make some money? Do I have to invest for 5 years, 10 years, 15 years before I can make money? Or can I do this? Can I do this? Yes, Glamour, you want to be able to do what you want when you want. Yes. So maybe you're wondering, can I invest? Am I the right person to do it? I do have a bag of degrees like Keisha. Can I still do it? Yes, absolutely. Yes. Definitely, 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 definitely. Definitely you can. And I'm going to show you how. Investing is very easy. You just need someone to show you how to do it. And that's what I'm here to do. Show you exactly what you need to do to get started. So a lot of people right now put their money in a saving account. I want to kind of help you guys understand the difference between saving and investing. When you're saving, your money is in an account called a savings account, checking account, money market account, money market fund. All of those are savings account, basically. It is good to have them just for your emergency fund. But after that, you need to get into investing because what happens when your money is in a savings account, the return that you get is very low. And especially now with inflation, where you see the prices of things going up so quickly, your saving account can't help you beat inflation. You cannot beat inflation with a saving account, and you cannot get rich with a savings account. Absolutely not going to happen. You have to keep pouring money in there, and the rate of return you're getting is not high. So if you have a saving account, the only thing you should be using it for is for your emergency fund. That's all. After that, you need to be in investing if you're looking to create wealth. So for everyone here, first piece of information, stop over saving, right? If you are saving now and you have $2-3 million and a whole heap of money in there, much or even 500,000, 200,000, if it's more than 3 to 6 months of your income, you need to take out the excess and start investing it. Take it out. We're going to talk about how exactly do you invest, but stop at the 3 to 6 months emergency fund, and we need to get into an investing account, a trading account, a brokerage account. That's what we need to do. Because with investing, that's where you make your money work for you. This is how you create long-term wealth. This is how we get financially free. This is how you beat inflation. This is how you get a higher return, but there's higher risk. The thing with investing is that you have to learn how to calculate the risk that you're taking, how to understand the risk that you're taking, and how to minimize the risk that you're taking, which is what I teach you to do. So we're not doing anything that is overly risky where you can't sleep at nighttime and you have to wonder if your money is safe, what's happening. I don't teach any of that. I teach you how to make solid investments. That's what I do. So another thing happening now is struggles with inflation. Friday, October 1, last week, Friday, that just gone, the Bank of Jamaica raised interest rates. You can oversave, yes, because you should. So, Joel, the thing with saving, when people think of it, they say, oh, you save for a rainy day. That's when you save for your emergency fund. That really is the purpose of saving, for that emergency fund. After that, if you're looking to build wealth, it will not come from saving. I can absolutely tell you that. Any wealthy person that you study, none of them have a bag of money in a saving account and use that to create wealth. All of them have invested, every single last one of them, because you have to do it. So the oversaving comes when you put too much into the savings account past that 6-month mark, when you should have been using the money to invest, and so you can get a better rate of return and you can achieve wealth. That's how it works. So you need a combination of both of them. The problem is some people just do one, they only do the saving. That's where the challenge come in. So on Friday, the Bank of Jamaica increased their policy interest rate by 1%. I don't know many people saw this news, but it is very big news, very, very big, because what the Bank of Jamaica is trying to do is combat inflation. They realize that the prices for things are going up. Patty gone up, KFC gone up, everything. You go in the supermarket, chicken is ridiculous. The price of whole chicken has gone up. So what the Bank of Jamaica is doing is increasing their interest rate to kind of help with inflation. So they're signaling to the commercial bank, start giving a slightly higher interest rate on your savings account and anything else that's tied to the BOJ rate. They're saying, let's go up by 1% because the prices of things are going up too fast. Same thing is happening in the US. Same exact thing. High inflation there as well. And so the Federal Reserve, which is the central bank in the US, they're also looking at inflation and wondering, okay, what should we be doing to combat inflation? It is a very real problem. It's a very big problem. A lot of people not really realizing the impact that when the prices of things go up, it becomes harder to afford them. And when you're now locked in your savings account, it becomes even more difficult for you to achieve any wealth when the price of the house that you want to buy gone up. As our Orville is saying, the price of your dream house keep going up drastically. And so your saving account return can't catch up for how the price of that house going up. You want to be paying for a dream vacation or you want to buy certain things. You can't buy them because the price keep going up. And no matter how hard you work, you keep trading time for money, you do overtime, you do weekend work, it still won't make up because the prices of things are going up so rapidly. The only way to combat inflation, the best way is through investing, because when you invest, the return you're getting is higher than inflation. In Jamaica, the Bank of Jamaica tries to maintain inflation between 5 and 6%. And in the US, the Federal Reserve tries to maintain inflation at around 2%. So in Jamaica, in any given year, The Bank of Jamaica does not want the prices of goods and services to go up more than 5 to 6%. And in the US, the Federal Reserve does not want the price of goods and services to go up more than 2%. No, your savings account is not giving you that return. Savings account in Jamaica.
Me, Claire, and the whole surgical profession. I get it.
Hello. Savings accounts in Jamaica don't give you over 5%. And in the US, savings account there do not give you more than 2%. So you have to, no more than ever, it is critical that you invest, especially in a high inflation environment. You have to be investing if you want to be able to afford your dream house, your dream car, your dream lifestyle. You have to invest. So I just put it out there plain and bold again. Invest now and be set for life. You have to. If you're not investing, it's not going to work. I can guarantee you that for sure. So different types of investments that are out there. First one, everybody knows a stock, which represents ownership in a company. You also have bonds, where you are a lender to a company or you're a lender to a government. So bond returns are usually lower right now. They're lower than stock. You can also be in a unit trust or a mutual fund. So the cap funds they're talking about, Trinita, that's a unit trust as well. So that's another form of investment. You can also invest in precious metals. So if you want to invest in gold or silver or copper, that's another way. Everybody knows these days about cryptocurrency. You can invest in that as well, or you can invest in commodities like oil, natural gas, corn. You can invest in those, and you can also invest in real estate. These are different ways that you can put your money to work for you. Notice the savings account is not on the list here because it is not an investment. It is just your saving account for your emergency fund. When we talk about investments and when people talk about investing, they are talking about one of these items here. Yeah, so Joel, what you want to beat is inflation, but when you think about achieving your goals, you want to invest also such that you can achieve your goals. So if you want to buy a house for $20 million, $30 million, you need to come up with a plan of how much money am I going to put in investment and what rate of return can I get so that my money will grow to the 10 million or the 20 million so I can buy the house. That's how you look on it. That's how you become wealthy. You set the goal first and then you work backwards of what do I need to do to get to that goal. If you do that, you must get the goal because you've done the work to determine the cost of the goal. And then you have also done the work of creating a plan to reach there. So once you follow the plan, you're going to get to the goal. The problem is a lot of people don't sit down and work out exactly how much money they want. They say, yeah, I just want to be rich. How rich do you want to be? How much money exactly do you want? If you take the time and work it out, you're going to get there. All right, so let's look at this stock, for example, Tesla. A lot of people know the Tesla cars. This is the return on Tesla over the last 5 years, 1,860.53%. This is what I'm talking about with investing. No savings account in the world is going to give you this return. None, no matter where it is, you're not getting that return on any saving account. If you had bought Tesla stock or Tesla shares 5 years ago, you would have made 1,860% return. That's what you would have made. So you would have bought it here for $61, for example, and that $61 would have turned now into $770. This is what you get when you invest. This is the type of return I am used to, which is why I know the savings account doesn't work other than just to have your emergency fund. After that, you need to get into investing, which is what we're talking about today. So on the Jamaican side, this company, Fesco, Future Energy Source Company, they recently listed on the Jamaica Stock Exchange at around $1, as you see here. This is it. Fesco, this is it, Orville. Fesco went from $1 up to $3. That's a 300% return. 3 times your money in 3 months, you would have tripled your money, right? Still very good returns you can get as well overseas. Oh, so overseas and in Jamaica. It doesn't have to be exclusively international stocks. Here on the local stock exchange, you can make that return as well. So let's talk about when people say stock, what are the different things they want to know? A stock represents ownership in a company. So when you buy a stock, you're a part owner in the company, right? So the symbol they talk about here is the stock symbol, TSLA. In Jamaica for Fesco that we just looked on, it would have been FESCO. Fesco is the symbol. Then you have the stock price, which is the current price of the stock, the change in value over a particular period, how much is the stock going up or down, and then you have a price chart usually. Yeah, so definitely, Orville, you want to get in early, which is what I teach, how to find great companies such that it will go up like that. There's a way to do it. You guys just need to learn it, and I'm gonna show you. So it's not hard. It's not. So the blueprint I teach is called the Great Investing Blueprint. I absolutely love it. I love the name of it, Great Investing Blueprint. So essentially what I teach you to do is find great companies, then you buy them at great prices. This is critical because what a lot of people do, they see a company and say, oh yeah, I love this, I went buy it. But you have to be careful what price you buy it at. You have to be careful what price you buy the stock at. So next time somebody come to you and say, yeah, you need to buy Wisynco, yeah, you need to buy Fontana, you need to go buy NCB. You ask them, yeah, what price is it trading at now? Is it trading at a high price, a low price? They're usually going to say, I don't know. But you have to be careful when you're buying stocks. The key is the price that you buy it for. You don't just run in and just any price, you just buy it at the current price. You have to be careful of the price that you buy the stock for. And then when you buy it now at this great price, you hold on, you get dividends from the stock, and then you're gonna, which is when they pay out a piece of the profit. So you hold on, and then you're able now to get great profit. That's how it works. You buy the stock at a great price, and then you hold on for great profit. Do you believe in DC? What is that, Joel? What's DC? Dollar cost averaging. Yes, absolutely. Absolutely. So what Joel is referring to, dollar cost averaging, means that you try to achieve the lowest cost possible that you're buying the stock. So because you won't be buying stocks over time, you try and make sure that the price that you buy it for, the average price that you buy from this month, next month, following month, the average price should be low. Yes, I believe in that. It absolutely works. Investing in stock that do not give dividends. All right. So, Kellyanne, with investing, you make money two ways. You make money when the stock price goes up, and you make money from dividends when the company pays out a piece of their profits to you as an investor. That's what a dividend is. I am a company, I make money, I pay some of my profit to my investors, I'm paying dividends. Now, you make money the two ways. I believe in investing in both. It comes back always to your goal. What is the dollar amount you're working towards? For persons who are looking to use their investments to live off of it, so you need every month you need to be getting money, you're going to want to invest in stocks that pay a lot of dividend because you're going to live off of that money. For persons who are investing to buy a house, buy a dream car, dream vacation, they are looking for growth. So they don't really care about getting dividends. They care about finding companies that the stock price will grow really fast. So each serves a purpose. I believe in both of them, but I use them for different purposes. If I want to live off a certain part of my portfolio, I'm going to buy a lot of dividend stocks. If I'm investing to achieve a particular financial number, I'm going to invest in growth companies to get there. So this is the blueprint, but how exactly do we analyze the companies? How do I find a great company? Everybody talk about, yeah, you need to, is this stock good? Is this stock bad? How I know and how I teach people is by looking at the great investing blueprint and the great. So I'm going to go through the meaning of each. So this applies to any stock in the world, anywhere, Jamaican, US, cryptocurrency, anything. You have to look at these factors. And then we can go through a couple of examples together. You guys can give me some companies and we can talk about them. So first one, the company has to have growing revenue and net profit. The revenue number is on your income statement. Your profit and loss statement is the first line that you see in that income statement, the revenue, the top line. Is that number growing every year, every quarter? If it is, tick. That's the first part. Next thing you'd look at is the net profit, which is the bottom line, the last line. Is that number growing? Yes or no? The growth in the bottom line is what moves the stock price. Stock price move with net profit. You can always remember, Keisha told you, stock price moves with net profit. If the company not making any net profit, the stock price is not going to move because that is what really push any company, net profit. But the net profit comes from the revenue. So the revenue, the top line, the first line in the income statement has to be going up, and the bottom line, the net profit, also has to be going up. That's the first criteria. So if you have those two, is tick, tick, revenue growing, net profit growing. Then we need to look at a renowned business model. So I always use Apple when I talk about this. For example, Apple has growing revenue and net profit. When I look on their income statement every year, I know it is growing. I see it for myself. It continues to grow. The business model for Apple is also very, very good. What I like about Apple's business model is that their customers are very loyal. Everybody who has Apple products, if they have an iPhone, they probably have the iPhone and the iPad, or they have the iPhone and the watch, they have the iPhone and the pods, they have the iPhone and the MacBook. Nobody really only has one Apple product. Once you're an Apple user, you tend to have multiple of them. And the next thing is that you tend to also buy new ones as they come out. So when they release the new iPhone, you're going to buy it. They release a new MacBook, you're going to buy it. Love that because you put money in my pocket. You make the company do well. And when the company does well with their net profit, their stock price goes up. So me as an investor, I love that. I love to see people buying up the Apple product because that is good for me and my investing. The next thing is that the leadership team has to know what they're doing. Apple's leadership team, very, very strong. They're experts. They've been leading the company for years. They've been in that industry for years. They know exactly what they're doing. They know what the customers want. They know how to make them happy. They know how to keep the customers coming back. The asset base also has to be strong. The asset base now is on the balance sheet, which is another financial statement. When you look on the balance sheet for total assets, that number has to also be looking very strong, meaning that it's also growing. You can't look on the balance sheet and say $2 in assets. If you see that, you run away from that company. They have to have a strong asset base because it is the asset base that they use to run the business. So when you look on the balance sheet for Apple, that number is huge. It's in the billions. And that number keeps growing every year. So they keep solidifying, they're growing the asset base. I love that as well. So it's another tick. They also need to be at the top of the industry. They need to be industry leaders. So I never ever teach people to buy penny stocks or anything like that because it's too volatile. And you need to be able to watch it to make sure that you don't blow up yourself or blow up your money. When you buy a company that is an industry leader, you know they're not going away. You're not going to wake up tomorrow and don't hear about Apple, or not hear about Google, not hear about Facebook, not hear about Amazon. You will always hear about these companies. So yes, in Jamaica, we call them blue chip companies. I always say any company that you're born and you see it, and you know that you're going to die and leave it, is a company you want to own. That's how you create generational wealth, because you born and see it, you buy shares in that company, you're going to die and leave it so you can pass on those shares to your beneficiaries, to your family members. That's how you create generational wealth. You don't create generational wealth by buying a stock in a company that tomorrow it gone bankrupt and it no longer exists and you lose all your money. Doesn't work, don't make no sense. You have to buy companies that stand the test of time. No matter what happened, recession, boom, pandemic, those companies are still around. That's what you want to own. That's how you create wealth. Yes, you can do the other exotic stuff if you want to, but you need a solid foundation first. And that is what I teach. How to have that solid foundation. How exactly do you set up that solid foundation? And then on top of that, now, if you want to do anything else, that's brought on top of it because you already have that solid foundation of investing. So let me open it up for a little bit. Any company you guys want to run through this framework? Any company in your mind that you're wondering, is this a good stock? Is this a bad stock? I'm going to run it through the great investing blueprint. And we can see. NCB Shelley. Absolutely, absolutely. NCB, because their revenue and profits are growing. They have a renowned business model. KFC not listed, Gabriel. But KFC would fall under it. KFC is so growing revenue, net profit, renowned business model, expert leadership team. Yes, NCB has all of that. Yes, for sure, Tony. And if KFC were listed, I would buy unlimited amount of shares in that company. Yeah, that's exactly what you want at KFC. Proven, yes. Their revenue, net profit, they're growing. Their business modeling is renowned. Sagicor Barita, yes. I saw one. Zoom, yes, great company, but going through struggles. Gene, we know that they're struggling, but it is another great company, but they're struggling at the moment. Carb Cement, yes, absolutely. They in particular, they've been up over 50% this year. That stock is doing extremely well. Their revenue and net profit is growing because of what's happening with construction in Jamaica. With Cinco, yes, as well, they are. They are. However, the problem with Ristinco is the bottom line, that net profit is struggling. So that's where I would kind of be a little cautious right now. So one thing we'll have to also do, and this is a good parallel for me, when we're talking about the great companies, they exist in a particular environment. What you have to also learn how to do is how to connect what's happening in the world with what's going to happen with a company. So for example, now, with high inflation, companies that have to be importing goods are struggling because they're paying more and more for shipping costs, which are tripled this year. Shipping costs have tripled. So any company that you know has to import a lot, all of these distribution companies, they're going to struggle a bit because their costs, their input costs, the cost they have to pay to buy their goods has really gone up. If they're able to pass on all of that increase to their customers, they'll be fine. But not all of them have been able to pass on the increase based on the type of good that they're selling. So some companies that they're selling more of like a commodity item, like a basic item, they can really hike up the price on a basic good. So they're going to be struggling. But companies that are distributors of luxury items, they can increase the price for their luxury items, knowing that their customers still going to buy it. But for persons who would be selling regular toilet paper, commodity goods, basic goods, they can't really increase prices as drastically as a luxury good. So when you analyze companies in Jamaica, you want to think about that. Run it through the framework. What's happening now? How is this company likely to do based on what's happening? Another thing with the oil prices going up, which companies in Jamaica would benefit from higher oil prices? Think about that, and you want to go and buy those companies because we know oil price going up because we're having inflation. And you see it every day. The price at the pump is going up. So when you think now as an investor, you put on your investor hat, you ask yourself, which companies can I buy that are going to do well based on higher oil prices? Yeah. So I'll leave that little hint there. It's a little nugget. You want to think about that. You also want to think about a drive around. Construction is booming. I see all of these new developments everywhere. I see hotels being built. I see residential being built. I see commercial being built. Which companies will do well based on that? Is it the cement company, the lumber company, what companies are going to do well when you have a construction boom and you want to own those stocks. That's primarily why Carib Cement is doing so well this year, because they're the only distributors of cement in the island. So every single building that's built, the cement comes from Carib Cement. That's a very profitable place to be in. And that's why they're doing so well. The net profit going up, so the stock price going to go up, because the net profit is what drives the stock price. So you just really want to sit down and think about which company going to do well, which company's net profit is going to go higher in this environment, and then you buy that stock, because net profit is what drives the stock price. So when you do that work and you think about that, the next thing you're going to ask is, all right, how exactly I get started? Keisha, give me some info, but how do I implement that? First thing you want to do is open your investment account. Right now, you maybe have a savings account, but if you're getting into investing, you need to have an investing account. First one you can open locally. You can open an investing account locally with your broker. So your Sagicor, your NCB, your JMMB, your Barita, your Proven. You can open all of those. You can open an account there to trade Jamaican stock. Or you go on the Jamaica Stock Exchange website. I can put the website in the chat. And they have a big, nice banner of how you can open the JTrader account. If you're struggling to open it, their number is there. They have also an online chat. They will help you to open the JTrader account. If you want to buy stocks now in the US, you're going to open an account with Interactive Brokers. I'm going to give you the web address for that as well. This account opening takes probably like 10-15 minutes to open the Interactive Brokers account. Literally, you go on, there's going to be a button that says create account, and you create the account. Fill out the little areas that they have. It's very easy to do. Once you finish opening the account, they're going to ask now for you to wire money from Jamaica to Interactive Brokers. So that would mean go to your bank and you do a wire transfer to Interactive Brokers. That's the second part here, you deposit the funds. Any account you own, you need to put money in there so you can be able to buy stock. TD Ameritrade is also another one, Orville, but Interactive Brokers, I like it. It's a bit easier for most persons, but you can absolutely do TD Ameritrade as well. You put money in the account, you deposit funds. Now, to be wealthy, you have to regularly put money in the account. You cannot put it one time and then say, okay, yeah, this is it, I am set. No. Every month, you have to commit to put in a certain amount. Whatever that certain amount is, that's what I teach. I teach you, we do the calculations together. It is a formula. You just follow that formula. You put the lump sum to start, yes, or you put just whatever you have to start, because the interesting thing on the US side is that you have something called fractional shares. You can buy a piece of a share. You can do that on Interactive Brokers. You cannot do it on TD Ameritrade. But on Interactive, you can buy a piece of a share. So even if you have 100 US, you can buy a piece of an Amazon share, a piece of a Google share, right? So there really is no need to get started at all. You deposit the funds, then you set up a monthly contribution. How much money am I putting each month into this account? Set up a standing order to make sure that you stay disciplined. And then you now need to buy the stocks. Follow the blueprint that I showed you, which is here, of the stocks. How you analyze companies. This is what you follow. The revenue is on the income statement. The asset base is on the balance sheet. Follow what's there, and you will be able now to pick stocks. And then you keep repeating. You put the money in the account, you repeat, you keep going, you keep going. What I teach specifically, it charges a monthly fee if you have less than a certain amount. No, brokerage accounts don't do that. No, so what they do is when you're doing the trades, that's where they make their money. They don't charge. It's not like a savings account or any standard account like that. Interactive Brokers, any trading account, brokerage account, they don't make their money that way. They make their money on the trading spread. The difference between what you buy and sell for, that's how they make their money. All right. So for those who are saying, yeah, I'm ready, want to go, I see what you're saying. I am here to help you. You can, a couple of ways, if you have questions based on what I've shared, you can drop them in the chat and we'll talk about them. Or if you have more specific personal questions that you want to ask, you can book a meeting with me here. I've opened up some slots. I do this every month. I open up slots and we can work through whatever questions you have free of cost. So there's no reason for you not to invest because I am here to help you. If you also decide, you know what, I want to work with Keisha. I want her to teach me exactly how to invest. I want to be set for life. I want to be financially free. During the call as well, we can talk about that and get you signed on as a client. But the aim here really is to make sure as many people as possible get started with investing because I don't want anybody to not be wealthy. That is my goal. That is my passion. That is why I keep coming here every month to keep telling people, yes, you can get started. Yes, it is easy. I will help you. So you have no reason. You have someone who is highly trained, highly skilled, expert. I've managed billions of dollars in Jamaica and overseas. I've managed my last set of accounts I had was over 100 billion Canadian dollars. I'm an award-winning financial analyst. I know this thing inside out. Inside out. I know it very, very well. And you have me to help you. So these calls, Chantel, there's no cost for them. If you sign on to work with me as a client, where I go into way more detail, yes, there's a cost for that. Right? Also, for persons who want to reach out to me directly, I will put my email in the chat. You can email me there if you're like, well, I just want to get started. I want to work with you now. Ready? I'm putting my email there. But you'll also get me on these calls. A bunch of them are available. So we will connect one way or the other. But I believe everybody should be investing. I believe everybody can invest. There's no reason for you not to be investing. Everybody can be wealthy. My role, now that I know what to do, is to show you what to do. That is my mission in life, to help as many people as possible. Because if I don't help you, I don't know who will help you. I don't want you to be left stranded. I don't want you to feel that I have to stay poor forever. I want you to know that your life can be very different, drastically different through investing. This is why I'm here every month to show you. And these calls here, sign up, it is free. Come with your questions. If you want to get started, you want to learn, I will give you the info to sign up with me as well. It is not, yeah, so it's not very technical. What I'm very good at doing is making complex things easy to understand. That's a gift I have. I can learn it in the Japanese, the jargons and all that, and I know how to break it down real for you to understand. So you have a very good teacher. The least amount of stocks you should hold in your portfolio. So I like to say it's different. When you're just getting started, you have never invested ever, you need about 2 to 3 companies and you're fine. For persons who have dabbled a little in the pool of investing and you want to go over into the deep end, I typically recommend up to 10 stocks, different sectors, different industries, so you get diversification. But 10 is a good amount. 10 great companies, you are set. I also believe that with cryptocurrency being the future of money, you do need some exposure. Not everybody has to agree with me. My personal view on it is cryptocurrency is where the thing is. I want to be a part of where the world is going, and so I will invest in it. But 10 stocks is good. Cryptocurrency is a digital asset. So like digital money, basically digital currencies. I believe in the future, and the Bank of Jamaica is already doing digital currencies. They're pushing it. They're in the pilot stage. You're going to be able to do transactions digitally, electronically. Paper money is going away. Why? It is very expensive to print paper money. Let me 10 mil to no Orville. Paper money is going away. It's very expensive to print. And with everything else being digitalized, money is just the next thing in life. Cryptocurrencies are, however, more secure than other digital currencies from the central bank. They're more secure. And I feel with persons now valuing security, it's the natural way to go. So I love it for that. I think it's going to be the future of money. All right, let's jump into some questions you guys have. You can unmute yourself or drop it in the chat and we can talk about it for the remainder of the time. But if you want to invest, know your chance, ask your questions. I'm here to help you get started. Or you jump on a call with me and we work it out together, or you sign on to work with me and we'll get it going. All right, Stephanie, you can go.
Hi, Keisha. You raised a point about Carib Cement and their net profit and construction. But how do you know what is a fair price to buy a stock at when it has already started to climb?
Good, very good question. All right, so back to the first point, that net profit is what moves a share price. So what you really want to know is the net profit for Carib Cement going to continue to increase? Because it's already increased a lot, it has, but is it going to continue to increase? Yes or no? If you believe yes, it's going to continue to increase, we have to now ask ourselves, how much do we think it's going to increase? What I see happening now, there are around 94 new developments, and I only know because I read it in the paper, it's public information, 94 new developments across the island. Though that 94, what the article said is that it's a record number of new developments, whole lot. Plus, I also see in the paper all the time, news around new hotels coming and they're going to be building and so forth. All of that has to come back to Carib Cement. Carib Cement also mentions when they release their information, their financial information, that they are becoming much better at controlling expenses and that they are set up to take the increased demand. What that said to me then is, all right, you're going to get more revenue because I see all of these new developments. I see the hotel coming. Everybody has to buy cement from you, so it's going to go up. Then you are saying to me, yeah, I'm getting better at controlling my expense. That means the bottom line on the income statement, that net profit is going to go up. Now, because I'm a long-term investor, I am less concerned with any short-term quick bump and quick money. I don't do the quick money, quick flip thing. And my clients know this, I'm always telling them, we're waiting this out. I know then that with what's happening locally with construction, Carib Cement profit can easily go 25, 30% from here because every quarter so far, they're getting double-digit growth in their net profit. So that's enough for me to buy the stock because I'm holding on for a longer period. I'm not doing a short-term quick flip where it is extremely critical for me to know in what time frame are they going to achieve X net profit. I'm holding for 3 to 5 years. I'm waiting for Carib Cement to go to $150, which I know it will because they're doing everything to get there. They're doing all of the right things. They have demand for their product. They're the only distributor. So they have a monopoly, them alone selling all the cement. They're containing their expenses. So they're doing very good to keep in all of the revenue they get. So it's more profit. And I know profit moves share price. But that's enough reason for me to buy it. Does that help you, Stephanie?
It does. Thank you, Keisha.
All right. Yeah. All right. So Joel says, I'm still not yet convinced about crypto, still learning, but yet still learning. I teach about it a lot because it is very new. It's been around for about 11 years now, cryptocurrencies, but still very new when you think about the whole history of paper money. But as we go through, I keep educating my clients on it over time, and everybody's getting more comfortable with it. I think we're all raring to go to buy some. But what is critical, what I teach, the importance of the price that you buy at, the importance of the price. You don't just buy, you have to buy it at a certain price. So even if I love Carib Cement, no, I'm not going to just tomorrow morning go and buy. I have to make sure it's trading at a certain price before I buy it. When investing as a starter, how much should one start with given the three companies? So in Jamaica, At $10,000, $20,000, you can get a nice portfolio with that amount of money. 10,000, you can. 20,000, you can get a nice setup of companies there. And then the main driver of your wealth is not where you start, it's how much you are putting every month and how consistent you are. So if you start with the 10,000 and you do nothing else, not good. You start with the 10,000 and every month you're putting in 10,000, you're going to be so amazed with the performance of what you get. Offshore banking. What do you mean? What it's called about offshore banking? Shelly? Are you talking like corporate banking, like commercial banking, like doing your day-to-day transactions, but offshore? But that's not investing. So investing comes back to one of these asset classes all the time. Day-to-day transaction is not investing. Has to be in one of these areas. All right, guys, anybody else has any questions for me? Anybody feeling pumped, saying, yes, I can do this? Keisha, you really show me that it's not that hard. I can do this. I can get started. Pumped. Nice. It's not, guys, literally open the account, put the money in there. Even if you say to yourself, I'm going to just try and buy companies that I know, I see them, I know that they're not going anywhere. Ready, Stephanie, good. If you say that to yourself, you can do it. You're going to be so amazed with the returns that you get. Ready, perfect. You're going to be amazed. All you do, key piece, I'm going to drop a little nugget here on the price, because everybody wondering how I do the price. Do not buy at the all-time high. So if you ready to buy a stock and you go and look on it, and you see the chart way up here, high, you're not buying there. You're not. You cannot buy at the highest price it has ever been. Think about you going to a store to buy bread and they say, you know, this is the highest price of bread all week, but I feel next week the price going to come back down. You're going to wait. Wait for a sale. Wait for a sale on the stock price. Wait for a sale. And that's when you buy. Something may go wrong, maybe Carib Cement have a little short-term problem. You run in and you buy at that time. Because the price that you buy is critical. You never want to buy at the all-time high. Never, 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 never. All right, so a couple people scheduled, nice. Thoughts on retirement. Fosterage, yeah, so Fosterage as well, Orville. Absolutely, it is tight construction. I do like them as well, but the price that I buy it at is important because Fosterage supply all of the electrical items to all of these constructions going on. Yes, naturally their revenue is going to go up because every place that build need power, they need electrical stuff. Fosterage will supply them, yes. But the price, that's what we need to watch. Thoughts on retirement. I'm guessing you want to know saving for retirement. Start early. That's the first thing. So you start investing early. Persons on here who are in their 20s, I am so jealous of you because if I was more aggressive earlier, I would have been even more set now. So start early and you have to be consistent with your monthly contributions. You have to be, and you'll get to your retirement goals. So even when you think about retirement, what you do, you grow the money. So you have to go into growth companies. And then as you get closer to retirement, you're going to switch into now income. This is where it's going from growth to income investing. You make that switch the closer you get to retirement. Let me see. Thank you, Denise. Love that comment. Thank you. All right, Stephanie saying one more. What are your thoughts on Jamaica broilers? Yeah, so Jamaica broilers isn't doing well. That's why the price not moving. Always, if you look on the financial statement, you're going to see that the net profit is not growing, that is why the stock price is not growing, because net profit have to grow for the stock price to grow. The net profit don't grow, stock price not grow. Now, what's hurting Jamaica broilers is the cost of the corn, chicken eat corn, the corn that the chicken eat, that price is going up because of inflation. And they're a perfect example of a company that can't really raise the price. They've raised the price of chicken, but they can't sell one chicken for $3,000. Nobody's gonna buy. Because you can just say, you know what, I'm gonna stop eating chicken, I'm gonna start eat fish, or I'm going to start coloring because chicken too expensive. So as much as Jamaica broilers is having to pay higher costs, higher input costs, they have to pay more for the corn to feed the chicken, they can't fully raise the price of the chicken to reflect their higher input costs. So they're going to struggle because of that. So they're, what we say, they're in short-term struggle. That business model, because they always are reliant on the price of corn to feed the chicken. That's their main business. So they are gonna do well when corn prices are low and they can get a nice, good profit margin. Outside of that, they will struggle. So like no hurting them. Yeah. Any other questions, guys? Has this been helpful? No, so that's the thing, Stephanie, you have to ask them future prospects for the company. They're gonna always have the same problem. It's really then with inflation, not looking like it going away anytime soon, meaning that prices of things are gonna keep going up. What's gonna happen for Jamaica broilers? They keep paying more for corn for the chicken, and so they can't raise chicken price. So they're going to struggle for probably the next year or two minimum. Carreras is one of those blue chip companies in Jamaica struggling, but struggling because of lifestyle changes. No smoking, not so socially acceptable. So they have to deal with that. But they're not going anywhere. But are they gonna see that growth in net profit? No. Is the one-to-one individual or the wealth strategy call? Let me put it again. No, if it's one-to-one you book, I'm gonna book you off. That's for clients only. I know all of them by name. This is the one you book for the call. Okay, yes, super helpful. Should we analyze a monthly or anything? A combination of both, but you really want to pay attention to the yearly move. Yearly. They don't report monthly, it's quarterly they report also, but the annual is what's important. Trans Jamaica, yeah, let's talk about this. My clients know my thoughts on Trans Jamaica. So Trans Jamaica being a highway, they earn money from tolls. Remember I said also, net profit moves share price. A company like Trans Jamaica do have nothing, there's nothing in their business model that's pushing net profit because it's just the tolls that they get, the toll only. So for them to have a big growth in net profit, they have to keep hiking the tolls, which they cannot because the tolls are regulated. So a company like Trans Jamaica is good for income investing, dividend investing, because they pay regular dividends. Are they a growth stock? No. This is why it's important to know what you're buying and why you're buying it. If you buy Trans Jamaica for growth, wrong, not gonna happen. You buy Trans Jamaica for income, yes, that's what it does. No, you don't watch them for a while. I teach exactly how we look at them and what to look for, Gabriel. So you're not going to look on it for like years. You bring up the financial statements, you look on the annual report, you read it, go back through the framework here, great investing blueprint, you go through that and you can determine if it's a great company. So if it's a great company, tick. Then you say, all right, what price I must buy that? That's what you need to know. Once you see that price, you buy. Simple. What I've started providing for clients also with the framework and is the list of great companies that we follow. So we have a great company watch list. And then I'm putting together now prices, the great prices. So every part of this, I'm now providing it to my clients, the company and the price. So you really have no reason to not be successful because I'm doing the research to say these companies meet the framework, these companies meet the great price framework. Set it and forget it. You have no reason not to be successful. How about Supreme Venture? They're doing well. Wheaton Wind Farm, another one, based on their business model, they have to continuously spending a lot. So you have to really be careful of their net profit number. Yeah, Jamaica producers, same kind of thing, Tony Ann. They're not necessarily a growth company because for them, they would need to be, they have higher input costs coming in as well. Same kind of, you think of Jamaica producers like your Jamaica broilers. Same challenges they would experience. So they're not necessarily income per se, but they would be more closer to growth, but they're struggling right now. Nice, guys. You are so engaged. Everybody ready to go and buy. Guardian, banks are notorious dividend stocks. They pay a lot of dividends. That's what they do. All your financial institutions, dividends, income. That's what they do. So they're not necessarily growth. Some of them do have high growth plus income, but they're primarily income stocks. All right. For those who are going to hit me on the phone, I will see you there in our call. For those who are signing up with me, I'll see you on the other side as we're investing. Oh, we can buy Pfizer stock. Sorry. That's international. So through Interactive Brokers. The ticker, I'll put it in the chat, is PFE. However, be careful of the price. The price, the price, the price, the price. You don't just go and buy. Pfizer is a great company. It is on our watch list, but you have to be careful of the price. If you look on the stock chart for Pfizer, it's now way up there at an all-time high. You're not buying it now. So again, follow. Great company, Pfizer, for example, yes, it is a great company, but the price that you buy it at is critical. You don't go tomorrow morning and just go and buy Pfizer. You have to wait on a great price. Patience is critical. All right, guys, I'm very happy this has been useful. I will see you next month. Tell a family, tell a friend so that we can spread the word. We want as many people as possible investing. So when I send a replay, share it with your friends and family so they also can learn. Tell others every month. I will be here to teach you. I'll be here also to take your questions. So I'm glad you guys enjoyed, and I'll see you next month, or I'll see you on social media. Many ways to find me. Let me bring them back up here. And the replay is coming out as well, so you guys can find me all over the place. Instagram, Facebook, email, YouTube, all there. Perfect, you guys. Yes, I'm here at your service. All right. Take care, everybody. See ya. Thank you.